Hi, I'm Laurie Littman.
And I'm Dave Baldwin with LS Investment Management.
The purpose of the videos here is to talk about what's happened in the market over the last couple of months since we've talked before. We're at the end of the year now, so we thought we'd give a little bit of wrap up of what's happening and where we think things might go.
All right, sounds good. So this is not investment advice. This information is general in nature. Only after we have a chance to directly speak with a client and understand their objectives, their time horizon, their tolerance for risk. Only then can we give suitable recommendations. So this is really just for educational purposes.
Correct.
So Laurie, what stood out to you about this last quarter?
I think it would be the Fed funds rate. This was the first quarter that it was raised by 50 basis points instead of the 75. And we saw the markets react to that. We're now at 4.5. And although we're not sure what's going to happen in 2023 next year, Bloomberg did a survey of economists who think that it's probably going to have another 0.5% increase in the first quarter. And then maybe a few more to the rest of the year. But by the end of the year, they think we might actually get it lowered, which I thought was interesting.
All right. In that this fourth quarter, we did see kind of at the beginning, October, November, those were both still pretty aggressive rate hikes. So, I think we definitely kind of topped out for the year. They kind of started slowing down a little bit. I think the market, there was a little bit of kind of buy the rumor, sell the news. And that I thought was really interesting. We saw, they're only doing 50 basis points. The market went up and then, immediately kind of sold off after that. So there's still a lot of volatility. So Laurie, this raising of the interest rate, what does that ultimately mean for the market?
Well, I think the market might be ready to call a recession, whether we had one or we're going to have a short one. I think as money becomes more expensive to borrow, I think we're going to see a bit of a tightening of slowing the economy.
Okay.
What do you see?
Well, yeah, I think unemployment is probably one of those factors. Again, money becomes more expensive to borrow. So companies, consumers, there's less money flowing, less business is being done. That's going to probably affect employment. So I think, unemployment right now is at 3.7%, probably going to rise in 2023. I think that's kind of how the Fed is trying to create this soft landing.
Yes, in fact, just the news today, the unemployment was higher than expected, than it's been, and the markets were favorable to that. So I think the Fed is okay with a little bit of increase. Dave, on the last video, we talked a bit about the earnings impact on inflation in the market. Have things changed over the last 3 months?
Well, I think we're definitely going to see kind of earnings contracting a little bit. That's the reports that we've seen. Alliance Bernstein had put out kind of a paper about seeing almost a 9 or 10% drop in earnings. And stock prices follow earnings. So I think you could make the argument that if earnings do contract, you see the stock prices come down. There was another piece from Goldman Sachs, and I think we're going to put the graph up. But best case scenario, the market continues on kind of its long-term trend, and we maybe end the year up 4,200, 4,300 on the S&P. But if we see earnings contract, if we see the multiple contract, that they can see the market maybe even goes down to 3,150 on the S&P. So somewhere in that band, we could see that happen early in the year, kind of that recession. Hey, things aren't looking great. The market sells off a little bit, and then we recover from there. So, I still think there's almost two scenarios. You could have a sell-off early on, earnings driven, and then you could still kind of end the year positively if things start turning around. I think a big driver of inflation this year has been housing.
Yes.
So what are your thoughts on that?
Well, I think housing is tied to mortgages, which is not the Fed funds rate, it's the 10-year Treasury rate. But those have been going up, which makes home prices more expensive. And so we've seen consumer confidence in building going down for 12 consecutive months now. We've had 11 months of decline in new home construction. And and we've seen falling home prices almost over the last year. And I think that the Fed is okay with that for a little bit right now because they feel that housing has become a little expensive. So I think we're going to see a bit more of that.
Okay.
And that's going to drag inflation up. What are the themes that we are looking at for investments this year?
Well, I think one area that I'm a little weary of is technology. If you're a business that, gathers data and then sells that information or sells that data to a marketer who's trying to, sell their product to a consumer, there's just less room for that. I think that your big tech companies, the Googles and the Facebook, all of these companies that primarily are trying to help sell stuff, the earnings just aren't going to be there. The marketing dollars aren't there for them to make their earnings. So I think that side of technology, we're past the COVID era, remote working, the Zoom, the exercise bikes, all those themes are kind of done. And so I think technology is still going to be a bit of a challenge for 2023.
That's an interesting thought because when I think of technology, I don't necessarily think of the big Googles and those selling just information. I think of innovation in specific industries. For instance, there's a business that's really exciting that grows lettuce of all things, and they can take the space of a goalie box on a FIFA soccer field and grow everything that they used to need the whole field for. And so I see technology in a very different light than you do.
And I agree that like vertical farming is revolutionizing the market, and that is definitely, they're utilizing technology to do that. I just think the market still segments, when you're looking at the NASDAQ, right, the market segments a technology sector. And so I think that's a good segue into kind of being a stock picker as opposed to just buying an index. Because I think that this year is going to be one of those years where you're going to want to look at each individual company instead of just buying one of everything and buying an ETF, maybe a more actively managed mutual fund where someone can find those stories, find the company that's doing something different and solving a problem in the market via technology without necessarily being a technology stock.
Yes, I would agree with that.
So is there anything else that we're looking at?
I think bonds have actually become attractive for the first time in a long time. We're seeing some, rates increasing, and so the bonds are paying out more.
Yeah, I agree. I think that right now is the time to kind of buy those longer duration bonds. Let's say that the Fed feels like they overdid it a little bit, and towards the end of 2023, we actually start seeing interest rates come back down. Well, the bonds we buy today will actually appreciate in value if interest rates start coming back down again. So I definitely think fixed income. I even think that it's worth sort of looking, even if you were an aggressive investor, there might be a reason to kind of increase that bond exposure in a portfolio.
Another thing I think we're looking at is that we still like U.S. long equities over international, and I also like going into next year consumer discretionary and consumer staples, because I think if we do have inflation going up and prices going up, people are going to spend their precious resources on items they need and items that they specifically want. There's not going to be as much extra.
Yeah, so the discretionary, not as much, but the staples, the necessities.
Yes, and then when there is a little bit extra, they're going to buy, a few of those. So I think, again, where we come into stock pickers, where those funds are going to be spent.
Yeah, and this was a theme in 2022. I think it continues, but value over growth.
Yes.
It doesn't necessarily just mean go out and find the biggest dividend payer, because I think that if a company has made too much of an obligation to pay big dividends, that's almost like having a debt obligation, right? So it could be detrimental to their business. But those companies that consistently pay their dividends, that maybe potentially raise them. But again, those companies, I think, they've held their own this year, right? I think that theme continues into 2023.
Okay. Is there anything else that you like?
One sector we talk about a lot, and I don't know that I would say I like it. Energy obviously did well in 2022. I think we'll probably see that level off. We've seen the prices come down at the pump. We've seen, that was a big driver of inflation. So I think that's kind of an area that I'm watching and maybe limiting exposure to, right? I wouldn't say I like it, but it's definitely a sector that I'm paying attention to.
Yeah, that makes sense.
Yeah. So, any final thoughts? Anything that to kind of wrap up 2022 and what we're looking at in 2023?
I think we're going to have a little bit of similar 23 as we had in 22. We're going to have volatility in the market until the Fed feels comfortable. So I wouldn't be surprised if we have another down. But don't panic. Don't sell off. We're managing these, and sometimes when the market goes down, that's when you can make some money.
That's a good point. I think I don't have a crystal ball. I can't call the bottom.
Darn.
But oftentimes it's that last bit of panic, right? It's that last little bit of volatility, and if investors get scared and take their money out, they're not in for the recovery. So we've already seen the market come down. Again, I don't know where the bottom is, but if we see another bout of volatility, don't let that be what scares you out of the market. We invest for the long term. Stay the course. All right. Well, thank you so much for watching this video. Again, this is Laurie and Dave from LS Investment Management. And
like us and subscribe.
Thanks for watching.
Please like us and subscribe.